Hi, hello, namaste, good morning, good afternoon, and good evening. Today, I'm your favorite Ajay Sowji here with Sravan Garu on a very special interview. So, before starting the interview, let's welcome Mr. Sravan Garu. He is the CEO and founder of insurance. So, he will tell us what is the insurance and all the details about it. So, Sravan Garu, good morning. How are you?
Good morning, Sowji. Good morning, good afternoon to all your listeners wherever they are, and
Yes.
happy holiday season as well. Thank you for
Yeah,
having
yeah.
me.
Holiday season is ahead. So
Yeah,
everyone is excited for that, right?
yeah, yeah, yeah,
Yes. So Shravan Garu, so you're the founder and CEO of Sunshine Insurance, right?
yeah, yeah.
Yes. Very good. So in America, we are seeing many IT companies and other companies, but how come you have started this insurance? What is the idea behind starting this insurance? And because we are having many other many other works and everything, right? So like
Yeah.
branches like IT are there, like otherwise engineerings are there, many things, doctors. So leaving behind all those things, how come you have come into this field?
Yeah.
Insurance.
Yeah, that's a good question, and it's an interesting question, Sowji. So the America has opportunity for every individual field. So as you
Right.
mentioned, IT field, and you can
Mhm.
do any type of business. But I have been working in IT industry for many years. One day, it came to me that what kind of a business which I would like to start without
Mhm.
any investment and to serve the people,
Mhm.
to help the people and get in returns as whatever I want to make. So when I got that, when I look around, it's only the insurance service business. Service oriented business is one of the topmost career in America. But
Mhm.
the starting is not that easy. So you need to
Yes.
gain the trust of the people. But I thought this is the one area I would like to explore. And then I started 6 years back.
Mhm.
Yeah.
6 years back. Yeah, as you said, to gain the belief of all the people, it's too hard.
Yep.
Whatever business or whatever company you start, for
Mhm.
initially for few months or few years, it will be very hard to overcome and to gain all the belief, right?
That is right. That is right. It
Yeah.
took me a couple of years to really get in front of the people and talk to
Mhm.
their needs and how they want to plan their financial. It took me a couple of years, at least 2+ years, to before I um, uh, confronted any of my friends and the families to sit with them
Mhm.
and explore what they are looking for. It takes
Okay.
a lot of courage. It takes a lot of knowledge as well.
Yeah, yeah. And in America, we are having many types of insurances. That may be insurance for the parents who come from India, that may be the insurance for the family members, insurance for the motor vehicles, whatever we buy, for each and everything. Even we have insurances for the pets, right?
Yes.
Yeah.
Yes. Yeah.
So for
Absolutely.
each and everything, we have insurances, right?
Mhm.
So, what is your perspective of life insurance?
Yeah, so there are, as you said, there are insurance is a big topic, and as you mentioned, so there are all types of insurances are there.
Right.
So I pick only the life insurance side of it. It's again a one individual area. It's a big, vast topic.
Right.
I wanted to get into only one area where I would like to get deeper and wider in that particular area. So I chose the life insurance. Well,
Mm-hmm.
when it comes to all other insurances are also very, very important, and some of them are mandatory. So if you take it,
Right.
it's a vehicle insurance, it is required by law, and some
Mm-hmm.
other things are also important, necessary, like a health insurance. Those are
Right.
kind of a commodity services. Like you definitely have to have it to live in America. But when it comes to life insurance, it is an optional.
Mm-hmm.
When it comes to people has to choose on their own, it's nobody mandates or nobody dictates them to have it, this insurance. So that is where sometimes you feel that you are challenged, but at the
Mm-hmm.
same time you feel really happy when you are convincing a family or a person to have this life insurance, which will help them tremendously in this today's economic world.
Right.
It really helps them. So that gives a lot of satisfaction when you're talking to and closing a case.
Right. So yeah, Shravan garu, in India also we have many types of insurances, like life insurance only, right? Since you are into life insurance, can you explain what is the difference with the insurance, life insurances in India and in America or other countries? Because each and every country will have their own design of life insurances, right? That may
Right,
be health
right.
insurance, life insurance, or as you said, automobile insurance, whatever it is. Every
Mhm.
country will have their own design of insurances. So can
Yeah.
you just explain the insurances in India and insurances in America?
Yeah. So nowadays, the borders are erased. It is like a one village, like entire
Mm-hmm.
world. So the
Mm-hmm.
India, I came some 27 years back to
Okay.
US. The
Mm-hmm.
time at that time in India, insurance is the LIC only. But
Right.
today, even like American companies, they partnered with a couple of local companies in India, and they
Mm-hmm.
are started giving the same kind of products in
Mm-hmm.
America. But I don't know much details of that. But I know some of the companies they have a same name with the local alliance. The
Okay.
major difference, if LIC, I take LIC is one of the biggest insurance company, life insurance company in India.
Right.
uh,
Right.
the major difference is there you have a short-term plans and
Mm-hmm.
money back plans. Something within 20 years you will get money back. Those kind of
Right.
plans, very short-term plans. But in America, you have a short-term plans along with that lifelong plans are there from established from many years ago. It is a
Okay.
100-year plan, 120 years age plans are available in USA. But today, I don't know, it may be available in India as well. But that's the biggest difference from LIC in particular, those days, olden days to today in America.
Okay, okay, got it. Okay, yes. Before going deep into the talk about life insurance, so we're from which part of India are you from?
I'm from Hyderabad in Telangana state.
Okay,
You
very
can
good.
call it. Yeah. Yeah.
Yes. Okay, good, good. So as you said, you are since 27 years, you are being settled in USA, right? America?
Yep. Yep.
Very good, very good. So in this life insurance, in America, particularly in America, can you explain how many types of insurances are there?
Yeah. There are many types, Sojanya. So there are the main thing every family or at least the individuals know that there is a term policy there. They at
Mm-hmm.
least they are aware of it. The term policy is like a 10-year, 20-year, 30-year, or even 35 years term policy. That
Mm-hmm.
means you will be covered under certain amount as a death benefit for those many years. You are making a contract with the insurance company. So
Mm-hmm.
you will end up paying a monthly or annual premium for those many years. And after that, it will expire automatically. And then
Okay.
there is a whole life. That is another type of policy. Instead of having 20, 10, 20, 30 years, whole life
Mm-hmm.
policies are 100 years. So
Okay.
people living age is at least 100 years. So that is the whole life. It was came into picture many years ago. Then after
Okay.
that, the whole life is something like a dividend paid. The returns are paid through dividends. So there is
Mm-hmm.
an indexed universal life, then variable universal life. There are a whole type of different insurances came in as part of this. The indexed universal life policies go beyond 120 age. So the way
Okay.
from the term insurance from 10 years to like the whole life and universal life policies that go your age of 120, which
Mm-hmm.
gives a various type of investment options that they provide, and you get money back as a. There are lot more features added into it. It made it as a, like a uh, complete your package to cover your late age, some kind of medical illness problems will be covered, like a chronic illness and critical illness kind of thing. And it will also help you to get you the retirement income. So you can plan according to that, and you can plan for a kids' education plans. So there are a whole lot of things that you can cover with these kind of policies. It's the way you design as per the need of the family. So what
Okay.
they're looking for, based on that, you sit and work with them and prepare a plan, a strategy which will suitable for them, and you deliver that kind of product to them. And there are a whole lot of companies available, Saujanya, in US. There are close to 2,000 insurance companies, big named companies, and they've been in existence for more than 100 years in US. So they've been managing trillions of dollars in these companies. So
Mm-hmm.
it's a very big industry, I would say, and there is a number of products, and these products will keep changing every 6 months. They modify it like at time to time. The requirements are changing, people needs are changing. So they've been modifying constantly of their products. If somebody has a product some 5 years ago, and today's product is way different than what they had 5 years back. So yeah,
Okay.
there are, it's a vast subject, like having different types of insurances within the life
Right, right,
insurance
right.
itself. Yeah.
Yes. So, Shravanji, as you have mentioned, there are many types of life insurances. So, each life insurance, usually we will pay some amount, right? Either
Mm-hmm.
it is for term or whole life or index or universal, whatever it is.
Mm-hmm.
So, all these four types of insurances will have different pattern of payments, right?
Yes. Yeah. Yes. The payment amount is designed as per the strategy what you are creating it.
Mm-hmm.
When it comes to term policy, which is the least cost policy,
Mm-hmm.
that one it will cover for a certain period, like a 20 years, and that cost would be significantly low, because you're not promising any other than just coverage of your death benefit. Other than that, nothing is promised on that term policy. So these
Okay.
days, some of additional features coming as a living benefits. So those are the added features they are having. But the way it goes is from term policy, a smallest amount, to a universal life policy, which is as much as money you can put it based on your needs and your income and your financial status. So you can put the money that you can define when you are creating the strategy. So it's a
Okay.
different payments, I would say, to answer your question.
Yeah, yeah, obviously. Yeah, right. I can understand. Yeah.
Mhm.
Yes. Because see, not when coming out of the box, right? Coming out of the subject, when we go to a college for admissions, each and every group will have different kinds of fees, right?
Right.
So
That's
the
exactly
same
right.
thing will be applicable for this insurance also. Different, let us think this as different branches in life
Yep.
insurance. So
Yep.
each branch will have different types of payments,
Correct.
right? Yes.
Exactly. Yeah.
So, which one do you suggest is important for a family insurance? Because some families will have three people,
Hmm.
including kids. Some
Hmm.
families will have more than that. So,
Yes.
uh, dep- so all these insurances depends upon how many people are there, or in these insurances will be applicable how many numbers it may be in the family, but for a particular family, these are the important things. So, which one do you suggest important for a family members?
See, the
Family members.
majority of the life insurances, they work individually. So
Mm-hmm.
because your individual life is secured, or I would say the financially secured, and
Mm-hmm.
that individual is examined and verified their health, and based on that, they will be given a quote. So it's not like entire family is insured with the one thing. It's not like, it does not go life insurance. Life insurance is person to person.
Okay.
Individually, you have to take it. So to answer your question, which one is the best one or what they have to do? So I would say the people coming to US
Mm-hmm.
from India in a big way, or various other countries as well, for study or for starting their new career in
Mm-hmm.
America, I would suggest at least to begin with the term policy, which does not cost that much. Say, suppose a 32-year a male, a good
Mm-hmm.
health, so they can get $1 million with a $30-40. All
Okay.
right. So it's not a big money, but on the other hand, they're giving some kind of protection to their family. If something happens to the husband or something happens to the wife, if
Mm-hmm.
they're making money or bringing the bread to their family, One day, if that chain, that money is stopped, how they will survive? Right?
Right.
That's very important. So,
Right.
what I suggest to all the young people, young families, at least to cover with the term policy, which does not cost much, but at
Mm-hmm.
the same time, if husband is, God forbid, something happened to husband or something happened to wife, you never
Mm-hmm.
expect, right, in this country, anywhere you cannot expect anything. So that's
Right.
why we need to, at least minimum coverage is the term policy. And
Mm-hmm.
later on, as they progress, as they make more money or whatever their situation, financial situation, they should start planning for a better future of their financial life. So
Okay.
that one they have to plan it. But at least to begin with, the term is the most important, essential. And I feel that, to tell you, Saujanya, during this COVID period, so
Mm-hmm.
you have seen how life has changed, right?
Right.
So the people became very panic, right? This kind of a sudden thing happens, a
Mm-hmm.
pandemic, like a worldwide, there is no medicine, right? So it's kind of everybody got panic and so many people started taking the insurance, right?
Mm.
So yeah, that changed the people's perspective. But I would suggest everybody should have that. It's a minimum. It's not nobody's mandating that, but when it is mandated to your vehicles or your buildings or your other materialist things, but why not you take care of your own person and take care of your own family? So that is my at least a minimum suggestion to any family. So that to begin with the term.
Super, super, very well said. And here I got a personal doubt. So, as you have said, the person and like entering into US from America, or sorry, from India or other countries, okay?
Mhm,
So they
mhm.
can start with term, but
Yeah.
after settling for a while, after a while, settling for a while, and
Mhm.
if he is good enough to take a very other bigger one, bigger insurance, can he switch from term insurance to whole life or indexed universal or something like that?
Yes, definitely they can transfer. There are companies, there are products they will allow when the person is started with a small one, and they have a flexibility to convert into a whole life, permanent life insurances.
Okay.
So the company products are allowed. The type of product you're choosing in the term, so which will allow them to convert within 6 years or 10 years, something like that, without any medical exam, they can convert into a full-time lifelong insurance. Yes.
Okay.
That's a good question. Yes.
Yeah, because everyone will get a doubt, right? Because as you said, term policy doesn't need more money, right, to invest, right?
Correct. Correct.
So, and starting in the initial stages, everyone will be good enough to pay $30 to $100, but not more
Mm-hmm.
than that. But
You're right.
after settling in a good job or anything,
Yes.
they're good enough
Yes.
to pay more than 200 or 300 or something like 500 also. If they are good
Absolutely.
enough to pay more amount, they will be
Yes.
interested to change into as good as possible, like that may be indexed universal or variable universal, right?
Yes. Yes.
Yes.
Absolutely, Sujini. So that is what the plan should be. The life changes, and will have a kids, and they are married, a single person to a family person, and then after that a father and the responsibility, and the kids will be growing. So there are a lot of things in their life happens in the future. So they need
Right.
to prepare for their kids' education, or they need to
Right.
buy a house, or they need to do some business, where the money, where they need to invest, and where they can get access that money to for their future needs, like even if it's anything, any situation, good or bad. So that is where they have to
Okay.
plan for it. But at least to start from somewhere.
Right.
Yeah.
Yeah. So here, so these life insurances, whatever you have said, term, whole life, everything. So even for the kids, also same insurances will be applicable, or for the kids less than 18 years or 20 years or less than that, even
Mhm.
not even a teenagers. So
Mhm.
even they have the same life insurance, or the policies will change for the kids depending on their ages.
No, it would be same. For kids below 18 years, they don't do any medical examination. That's
Mm-hmm.
the only the difference. But the policies are same, and the products, all the products, the majority of the products works from age zero
Mm-hmm.
to age 75 or around 80. So all the policies are issued for these kind of ages. So it's the same policies. Yeah.
Oh, very nice, very nice, very nice. Okay. So again, coming to the next point, what is an annuity? What does that mean?
Yeah, annuity is another big area that life insurance, majority of the people know it, at least to some extent. But annuity is the subject many people doesn't know, or they are not aware of annuities.
Right.
Annuities is, I would say, in simply put, it's a reverse of life insurance. In life insurance, you put every month or every quarter, you invest some money protecting
Right.
your life for certain amount. So if something happens to you, the money, a lump sum money will be given to your family. Whereas in annuity, it's a reverse. So you put a lump sum money and the company will decide, will give you a certain amount on a regular basis, like a monthly, quarterly, annually for your lifetime. So
Okay.
you will be putting the money, say, suppose that money is coming from your retirement account, 401k kind of thing, or TSP or whatever it is, or it could be a lottery money, who knows, right? If you get a lottery or if you get a sold a house. So you have that lump sum money. Where do you want to put? And the best way is to annuitize that. But there are so many advantages why you want to go instead of there is a option to put it in the stock market, that money, or put it in your bank savings account versus a CD or any municipal bond versus annuity. So why you choose annuity? It's another big area. So why it is required to put it in annuity instead of going for that banks or stocks or any other area. But the
Right.
annuity means a lump sum money is you put it there and you decide when you want to get as your retirement income from starting age, and company can give you a guaranteed lifetime income, and that's one of the highest product that each annuity company has. But they have multiple products and multiple variations are available.
Okay. So then how many types of these annuities are available?
Oh, there are fixed and indexed and variable. So these are fixed means you decide the company will give a fixed return income. Like usually bank will give you maybe 1% of interest, or CDs will give maybe depending upon the time. So maybe it's a 2.5%, and annuities will give around today. It's the good thing is 5.4% that they're giving.
Oh
So
my.
that is the fixed. Yeah, that's the highest
Right, right,
that
right.
today. So that is the fixed one. If you have a more like aggressive kind of investment you want to do with kind of a stock market, kind of mutual funds and those kind of things, you can go with the variable annuity as well. Variable annuity, just like it works like your 401k. So where your 401k, you put your money into a mutual fund, which goes up and down with the market, right? The same way variable annuity works, the similar way. And indexed market is that's something it gives the protection, the floor protection. Like when the market goes down below zero, you are protected. So you will not get any, your money will go down. So that is the kind of indexed universal indexed annuities are available. So the
Okay.
fixed versus variable versus indexed, these are different types of annuities. And on top of that, the annuities are immediate annuities or deferred annuities. Like you can start taking the income from tomorrow. If somebody is a 71 age, 70 plus, and they have a whole bunch of, usually I have seen, Sojanya, there are many people with the 401ks. They have a lot of money at the retirement account. I've seen a million, 2 million sitting in their 401k. Now, the reality is, the real picture is when there is a $1 million in their 401k, they have been working for 40 plus years, and it is a million for husband, a million for wife. And now that money is sitting in 401k or TSP accounts, those are in a mutual fund market where if you see that in the past couple of months and year, so we have seen a market crash of more than 25%. Now think
Okay.
about if that odd end money in their account, if 25% loss means $1 million, 250,000 is disappeared,
Oh
right?
my God.
Right. And I have seen so many of those cases as well. And now, for any person who is retiring or getting to retire around age of 62 to 67, so those people, they don't want to see, I want a big returns.
Mm-hmm.
Whatever the money I have saved so far in my 401k or wherever it is, I just want to keep it safe. I don't want to
Okay.
lose
Yeah.
any of the dollar, right? Even if you
Mm-hmm.
give me a 5% or 4% of fixed interest, I'm very happy. So that is the kind of taking the risk that nobody has at that age. If you talk to a person of a 35 age, they will be going in daily stock market and they can trade anything, right? But the same
Mm-hmm.
risk taking will not, you cannot see in age 55 and above, right?
Okay.
So
Yeah.
that's where annuities will come into a very, very helpful. And so you definitely have to consider, I would say, every single person, whoever is working and making a 401k account or TSP account or any 403b account, whatever the accounts, definitely they will convert one day in the future. They will be converting into annuity. That is important, and that will be 90% of the people do that. So that's where these annuities come into picture. And again, Saujanya, annuities works like you are creating your own social security. So in
Okay.
America, we get a social security income starting 62, right? And your maximum social security income is 67 onwards. But that gives as long as you live. The federal government is giving you the social security amount. So why not you create with your own 401k? You can create another second social security on your own with annuities, right? So
Right. Right.
you will have a two constant incomes guaranteed lifetime. That is the
Oh,
beauty
super.
of annuity. Yep.
Okay. Yeah. Yeah. Very nice. So, so this annuity, how that how this will be helpful for each and every individual.
Yeah, as I said just now, um, if individual is putting their money in a 401k retirement account, when they move that company to another company, they have the flexibility to move the previous company 401k amount to any company they wanted to. So
Okay.
any company in the sense, any IRA account, they can transfer it to. So that is where annuity comes into very handy and very growth potential by giving you the market risk protection. So I would
Mm-hmm.
suggest for any individual who is working in a companies, they move to a new company, I would suggest to look into annuity, whether it is suitable
Mm-hmm.
to you or not. Sit with a financial professional and find out how it look like if you transfer your previous company 401k accounts. So in America, I would say at least 4 to 5 companies they change in their lifetime. So
Okay.
they change if a consultant, they will change more frequently, but a permanent employee of a big organization, they change very infrequent, and I would say a couple of years at least they will stay there. But
Right.
still, people change at least to 3 to 4 jobs in their lifetime. So
Mm-hmm.
when you have moved these many companies and your money is sitting or leaving it, not monitoring it properly, then it's better to move it to an annuity, and that will give a great potential. So I want to tell you one small thing. So Janya, recently I was working with one of the client.
Mm-hmm.
The person age is 42 and he has a 250k so rollover money. And
Okay.
today's one of the company I showed that illustration and I showed it. It is from age 67 onwards, if they turn their 250k into an annuity, and they have very comfortable to get 100k per year starting 67 age to 95 age. So they are turning 250k. If I calculate from 67 to 95 how much they can make an income of at least $4 to $5 million.
Super.
So
Super.
yeah, I mean, where else you can get? I mean, with the peace of mind, that is the kind of annuities that they provide, these insurance companies. And again, it is methodologically they have calculated and they have designed this product, and there are thousands of companies. So there
Right.
are, yeah, I mean, you can look through multiple companies and see how which one is suitable to an individual needs.
Yeah. So, Shravanji, these days, not only the IT companies or whatever, even the small businesses are also starting, right? They're in a vast development, right?
Mhm.
Small businesses are developing very vast in America. So,
Mhm.
even those small businesses also can apply for all these types of insurances.
Yeah. So when it comes to businesses, it is called the business-owned insurances, BOLI kind of insurances, or they can do the individual insurances as well.
Mm-hmm.
So there are these insurance companies are they're providing the same life insurance to
Mm-hmm.
businesses in a different way, which will protect their business as well as their key employees. So there are a lot of products designed by these big companies.
Mm-hmm.
Something like if there are a couple of partners are there in a business, as an
Correct.
example, just to explain you, there are
Mm-hmm.
3 or 4 partners are there, and these 3 or 4 partners they've been successfully running a business for a certain period of time. After a couple of years, maybe who knows, but something happened to one of the partner. That partner is
Right.
disabled or person is left this world, then what happens
Mm-hmm.
is the remaining 3 partners plus the diseased person, the family will
Mm-hmm.
enter, and the family may not fit into that business, right? So the
Mm-hmm.
family doesn't have the same capabilities to run partner with
Right.
other
Right.
3 of the partners. So in that case, what they do is the partners, business partners life insurance is one option is there. It's a collateral coverage. So between those 3 or 4 partners, there is a coverage will be created. And if somebody left this world, and the money that they get it will be given to the family, and the
Mm-hmm.
remaining money will be used to buy his share back to these 3 people. So there is an
Okay.
arrangement
Got
that
it.
can do that, and there is no disturbance to the business. The family, if it's not ready, and it should not become a legal issue. And in this way, you can buy back the share of that individual. So that is the kind of business they provide. And on top of that, and if there is employees, if you have a business running and a person is very important to run a family owned business or a small business, so if they think that this individual is very important for me to run this
Mm-hmm.
business, if something happens to me, oh, I definitely need this person, right? In that case, there is a key employee insurance is available, so you can protect that person to stay with your company for a certain number of years. So
Okay.
that way you are saving your company. And same thing, if somebody is not happy with salaries or anything within your company, you can offer
Mm-hmm.
them executive bonus. Executive bonus
Mm-hmm.
plans are available. So
Mm-hmm.
today, companies gives the bonus, like they yearly, annually they pay the bonus, but there is no retaining uh, restriction when you pay out the bonus. Suppose you are paying a 30K as a bonus per year, he can leave the second year, he or she can leave in the second year or the third year. There is no period that you can retain them. But what is the life insurance companies are doing is they have come up with a beautiful product, and that insurance will give these key executive bonus plans. They can give the same 30,000. At the same time, they will have a retaining period of at least 10 years. They can keep it, right? So, but
Right.
that 10 years, you are giving the bonus. At the same time, you are retaining that person. But so that is the
Right.
kind of design you can do it. So life
Mm-hmm.
insurances are helping small and medium businesses as well. So in a
Right.
big way, it's
Mm-hmm.
another big topic, but
Yeah,
it is
yeah, yeah.
very important. It's a very
Obviously,
important one.
right, right, right. Because, yeah, so when it comes to small industry, small business or medium or big, whatever it is, so each and every business will have their own partners
Yeah,
and their own number of people working for their business, right?
that is
So,
correct.
yeah, so when the companies, when they apply for life insurance, so, does they need to apply insurance for all their employees, or their employees will individually apply their own insurances?
Oh, that's a very good topic you raised. So the company, suppose they have 100 employees within their
Right,
companies,
right.
and there is something called group insurance is available. So that is the majority of the companies provide, small or big or major organizations, they provide group insurance plans. So the group insurance plan is that gives like across the board, they don't have to go through individually. It's across the company. There is a set price for age groups, and this is the age group and how much death benefit you are looking for. One paycheck, annual paycheck, or 3 times or 4 times paycheck, and there is no medical exam. It's a group policy. So that is the one way of getting it. Companies offer it. Usually they deduct from your paycheck, maybe small amount. Again, it's a part of a term insurance, and that is how they cover. As long as they are with that company, as long as they are paying paycheck to paycheck and a regular deduction of that particular amount that they are covered, they are good for that certain period. But on top of that, if you want to apply a life insurance, it is goes by individually. So individually they have to apply for it individually. So it is up to them. So that's a different. But the group policy is only works for that company, and the individual policies you want to take it, it's outside of the company. So you have to apply for outside. So yeah, I mean that's how it works.
Yeah. So when it comes to group policy, right? And when we compare with the individual policy and the group policy, there will be a vast difference in the payments, right? And the amount.
Yes.
Right?
It would be. Yes. Yeah, it would be. The reason is, I mean, to answer your question, why it is the difference is the group policy across the company, they look at the how the impact of the risk level of out of 100,000 people or 50,000 employees. They design that insurance company will design that, hey, you pay me $5 per paycheck and monthly $10. I will cover for 1 year paycheck of your death benefit, which is maybe 150K or 200K we are talking about, right? So in that range, it may be $10, right? That's all you pay per month. But when it comes to life insurance, when you're taking it on your own, for the same 200K, you may get it for $10. That's fine. But it's a period that they have giving for 20 years, right? You're taking it for 20 years. Whereas in the company, it would be like whatever the period that you stay in that company, that's what it is you are paying. And it's again, every year, it may change. Again, every year you enroll into automatic enrollment will be there, and they may review it. The same, the person with a 30-year and the person with a 60-year will not be the same rated. It will be a difference. Okay, every year it will change. But the outside it is, there is no changes, and it's a fixed one for 20 years, and it's nothing to do with the company, and you are covered, guaranteed for 20 years.
Okay. So here again, one more question personally, because see, like we have passport renewals, visa renewals and everything, right? So for these types of, whether it is for individual insurance or whether it is for business insurance or whatever it is, group insurance. So does these insurances also have any renewal period?
See, when it comes to life insurance and the term ends, the policy ends. If it is a 15-year term life insurance, and after 15th year, it is automatically ended. All right. So if you want to renew it, you need to apply it. When it comes to whole life, it's 100 years or 120 years. You're already contracted with the company the day one, and your policy will stay for that many years. I mean, lifelong, basically. So that is the kind of policies. Like you renewal is, for it applies for term policy, but for whole life and lifetime policies, there is no need to renew. I mean, unless you want more money, more coverage, then you have to go for another application. But otherwise, you are already contracted to have it lifelong. As long as you're paying your premium, it is in existence.
Okay, got it. Because many people will be having all these small doubts also, which makes them very big. For us, they may be small doubts only, but for them, they are very big doubts.
Oh, yes. Right. So there are a couple of times people will not pay the premium, and what happens to the policy? Usually they have a 60-day period. They send the notice. They try to contact the person if they are not paying the premium, and it automatically ends after 60 days if they don't come back and pay the premium. So these are the types of the contracts they'll put it in, but it is the obligation that the person has to pay whatever the period they have agreed to pay the premium. It is their mandatory; they have to complete that period.
Wow. Okay. Nice. Very nice.
Yeah, yeah.
So yes, can you explain us about key employee insurance and executive bonus?
Yeah, the one I just explained, the key employees, insurance companies come up with the products in the business side of it. The key employee is, as I mentioned just now, if you are running a small business and you are dependent on one or two people, those two key people are very important to run the business. And if they leave the company, our business, whatever that entity that they have, and if the owner feels that, okay, these people are essential for me to run the business, and then how they keep these employees, the one or two I'm talking about, not all of them, one or two key people, they can do the life insurance. Life insurance companies allows owner to insure their own employee. There is a see, whenever the insurance comes, life insurance comes, it's not you can do the insurance on a stranger. There has to be some relation between those two people, whoever is insuring and insured. They should have a relation. It's a wife and husband, family, kids. So there is a blood relation. When it comes to business, employer and employee, that relation is there. So only within that certain relationship in the insurance companies will allow to insure their employees. So the beauty is if they are allowing to, your employee is insured by the company, that's one of the best thing. And you are giving some promise to the employee that, hey, if you stay with me for certain number of years, you will get this big benefit from the insurance company. You can give that promise. So obviously, if the employee agrees to that, and you know what, I'm getting of the 10 years later, I will be getting 150K through this insurance company, right? So that's a big benefit. Instead of getting every year, I will get this certain amount, a bonus or something like that. But this company owner is giving me a big benefit after 10 years. So I will stay here. So why I have to move to some other company, right? So this way, the company owner can keep their very important employees. And sometimes executive bonuses, these are the executive bonuses, they want to give an incentive to their employees of a high-ranking employee, right? High-ranking employees, they are very, very in demand in the market. So these kind of people, how they give the bonus, they usually give in a dollar to dollar, they give the bonus. Once they have the 1 year bonus, they can walk away from the company. There is no restriction, right? So instead of that, if you give an arrangement with a life insurance company and you give that bonus through life insurance and you keep it, that executive, for a certain number of years, you can keep it, and then at the end of the year or 10 years period or 12 years period, and you give a lump sum of a certificate of life insurance, that's a huge benefit for them. And what happens if they leave the company before 10 years, there is no loss to the owner. The company policy is owned by the employer and they can take the money back. So they're not losing anything, right? They have put a promise to the executive or key employee, hey, if you stay this long period, I will be giving the money. If you leave, you will not get it. So that kind of arrangement helps the owner of the company to keep their key employees or executive people.
Okay, got
Hope
it.
it makes sense to you, right?
Yeah. Pretty much.
Yeah.
So, Shravanji, very nice. So, you have explained us in detail, point to point in detail. So, do you want to tell our listeners anything more about life insurances and why to apply, and what is the exact period time to apply?
Yeah, sure. First of all, thank you, Sajanya, and thank you for Telugu NRI Radio and all the listeners across the country. See, the insurance is not what you want to buy it. It's not you can go and put your money down and get it. it does not work that way. It is the
Right.
company has to approve you, right?
Mm-hmm.
It is not you will take it, but company has to check your background and verify your financial strength as well as your medical situation, and then only they will give it. So
Okay.
think in that way. So when you're getting it means it's a big thing that you're protecting your family. So there are so many incidents happening across the country.
Right.
We don't want to see any of those things happen to our family. But even if it happens, hey, at least your family, your loved ones are financially secured. That's the key
Right.
thing you have to think about it. And some people, I have come across the people, hey, I don't care if I leave this world. Right? There are
Mm-hmm.
very 1% of the people I have come across that kind of person. But 99% of the people, they love their family, they love um, uh, their 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 friends, their parents, their entire neighborhood. They are like that. The
Right.
99% of the people, they love it. So when you're loving it, if something happens to you, and who is taking care of your family, that is what you have to definitely think about it. I strongly recommend it. And it is essential when you are looking into the monetary things, like if you're insuring your car. This
Mm-hmm.
is one of the things it bothers me, Sojanya. One of the things, somebody bought a BMW car, and they think that that is the most precious or important thing in their lifetime. No,
Mm-hmm.
not at all. It's a material. All right. So
Right.
if something happens to that car, and you can buy another one, there is a plenty
Right.
of money out there in this world, right?
Mm-hmm.
It's not that
Mm-hmm.
important. But if something happens to you, or something happens to your wife or your kids, that is, you cannot replace it. There
Right.
is no way you can replace it.
Yeah.
So our focus should not be materialist thing. Our focus should be your loved ones. That is
Right.
the important thing, and keep that in mind. And reach out to any financial professional nearby and secure your family, and without any delay. Things may
Right.
change, and yeah, so it's better for your peace of life, right?
Superb. Super. Very well said. And really, Shravanji. So I think very few people explain about insurances and what are all their uses, what are the benefits they get, and different types of everything. But today you have explained us very patiently each and every point in detail. Thank you so much for sparing this much time with us.
Thank you, Sajanya. Thank you, Telugu
Thank you
NRI
so
Radio,
much.
and your listeners. Thank you so much.
Yeah, thank you so much. Have a great day.
Bye bye.
Bye bye.
You too. Thank you. Bye bye.
Yes. So yeah, this is the special interview with the health life insurance CEO, Mr. Shravanji. So again, on the day we will meet with another special person. Till